So I think all of those things, this currency regime change, this changing geopolitical landscape, this huge derivative and debt-driven bubble deleveraging that we're going to have to go through is going to keep feeding that gold market for a very long time. So I don't think it's going to be 2 or 3 years. I think it could be 7, 8, 10, 12 years. Yes, during every major economic challenge that we've had in our history, we've had, unemployment issues. So I fully expect that to occur. But I also think on the flip side of that, there's going to be a tremendous amount of opportunity for people that are prepared and willing to accept that and willing to reskill and retrain, and people who have the guts to go out and start their own businesses. There'll be a lot more people starting their own businesses this time, much like we used to be, prior to the 1950s and 60s, when corporatism really started to grow. In that post-World War II boom period. We're going to go back to a period where people had to fend for themselves. They're going to figure out for themselves. And I think that ultimately that will be good.
Okay, so let's turn to gold. What's your 10,000-foot view of gold, taking into account the debt and deficit situation, the total debts around the world, purchasing power destruction, gold versus bonds in the eyes of the foreign central banks, and anything else that you want to take into account?
Yes, so gold is doing very well right now because the rest of the world sees that the dollar's having issues, and gold has always throughout history been money, but it's also, even in the current fiat system, it's the asset of last resort, or the fear asset, if you will, or it's the ultimate low risk asset. You can't create too much of it, you can't print it. It's getting a little bit more scarce and hard to find. The amount of gold is roughly kept up with population for most of human history. So gold is one of those things that accurately reflects inflation over time.
No counterparty risk.
Yeah. And if you go and no counterparty risk, because gold is gold, especially if you hold it in its physical form close to you, or in a way that which you can get to it very quickly. So since 2000, gold has beaten the stock market indices. Not every stock, but the major stock market indices. Why? Because gold's kept up inflation when stocks haven't. So people that claim that they've had these big gains in stocks since 2000 haven't really kept up with inflation, because gold is a monitor for inflation. We haven't even gotten to the gold bull market, technically, if you're looking at it. Gold's just repricing to inflation along the way. But what happens is when people sector rotate out of these other things, they're going to rotate into gold. The central banks have been doing it since 2010, 2011. They've been buying more gold and making and breaking records in gold for the last 13 to 14 years because they know what's coming. And also because they promulgated Basel III. When Basel III explicitly states that gold is one of a few things that are considered a high quality liquid asset on the balance sheets of commercial banks and central banks. So now they have a new asset they can go to, that they can use to enhance their position, within the banking community, and enhance their relative strength of their banking balance sheet. And everything in banking is relative. You're relative to everybody else. You want to be stronger. You're going to attract more capital inflows and more opportunity to make money. So the banking system has been recapitalizing with gold for quite some time. The people are it's starting to sink in. I have more people coming and say, Rob, I need to buy some gold. I have a friend that's been my friend for a long time, has understood my views for a long time. He just came to me this last Thursday, and said it's time for me to buy gold because he works for Citigroup, and Citigroup's laying off. And he's like, we went through the last layoff cycle together. And now he's like, I learned my lesson. I got to do something this time. So you see the public starting to wake up to it. And when that's when you're going to get the true gold bull market, is when the public wakes up and you have that incremental retail demand, is when you're going to see gold break away from just tracking inflation to going into a major bull market. And it's going to do that about the same time that the rest of the markets are correcting, getting rid of all that excess debt, deleveraging, all that type of thing.
So it sounds like you do see a gold bull run forming. Do you see it similar to the 70s or early 2000s, or more like what we saw in 2015 or 2020?
Well, I think we're going to have multi-years of gold going up, and I think it'll start at a certain inflection point, and then when retail piles in, it goes straight up. But I think this is going to take a while. I think gold's going to be valuable for a while. I can't give you a number what it's going to go to. I mean, I can hypothesize, but as the world deleverages and people use gold as that transitionary metal, it's not only going to be a transitionary metal to hold value, it's going to be a transitional metal in the currency system. Okay. So the new system is going to capitalize on gold to start off with, because it gives it credibility. Again, when they go to the new currency system, what are they capitalizing on? Gold. Okay. They're not capitalizing on dollars or, Deutschmarks or yen or any of that garbage. They're capitalizing on gold. So gold is going to be forefront in the system probably for about 20 years. Now, about 20 years in the system, some analysts are expecting the central banks to move gold out and go to more of a pure digital currency system. But it looks like gold will be forefront for quite a few years. So I think that gold's going to do very well. It's going to do very well for a long period of time. And I think it'll be a little bit different than last times because we're doing a currency reset. It's not just a recession we're going through. We're actually flipping into new currency regimes. And I don't think that the final currency regime has been set in stone, because even though the central banks want to do central bank digital currencies, grassroots efforts are springing up around the world to reintroduce gold as money or Bitcoin, private cryptos, whatever the case may be. So I think the people have a different idea than what the governments have. Yeah. So I think that also plays into gold because gold's a crisis asset. So I think all of those things, this currency regime change, this changing geopolitical landscape, this huge derivative and debt-driven bubble deleveraging that we're going to have to go through is going to keep feeding that gold market for a very long time. So I don't think it's going to be 2 or 3 years. I think it could be 7, 8, 10, 12 years.
Yeah, it's amazing. So you've touched on the retail gold demand side a little bit here. What can you tell us about retail gold demand and why it's been so weak compared to, say, Asian nations or even the central bank purchasing? Why are Western nation citizens seem to be so apathetic towards gold?
Well, we haven't had as money since 1971. And if you look at current finance education, whether it be what you see on TV or if you're going for a formal degree, because my bachelor's degree was finance and MIS, is a hybrid technical, but also a finance degree. And so I studied, accounting, finance, like most people did. And they teach you about dollars and debt system. And they teach you about Keynesianism and modern monetary theory, and macroeconomics outweighs microeconomics or human individuals. And so they've basically been teaching financial socialism to our students for the last 40 to 50 years. So everybody's been indoctrinated with this and believes in it because it's all the stock market rising. And what the financial media does is they put the stock market ahead of everything else. And as long as that's healthy, everybody believes everything else is going good. And that's all anybody pays attention to. What's the Dow and the S&P doing? You can listen to any radio show on the dial that you want to, and they will all about twice an hour have a report about the stock market. Why? Because that's what people want to know. They don't talk about gold. They don't talk about bonds and real estate. They say, well, the Dow Jones is up 47 points today. What the hell does that mean by itself without context? It means nothing. But you hear it drumbeat into your brain 50,000 times by the time you become of investment age. And so that's what you believe in. And so that's why Americans are apathetic. But, and I think that's what also gave rise to Bitcoin, is that people were looking for something that could replace the current system. And they were looking for alternatives. And the new generation had no clue about gold. Now they're turning on, though. The funny thing is, Bitcoin's done more for bringing people into gold than just about anything. The younger generations becoming aware of the situation and looking for alternatives has brought more young and new blood into gold than anything else could have. So I definitely think that there's, going to be renewed interest in those markets. So
you mentioned that you recently spoke at the PDAC 2024 convention. Mm-hmm. For those who don't know, that's the world's premier mineral exploration and mining convention. It's a convention that brings together about 30,000 attendees from over 130 plus countries. And they bill themselves as the event of choice for the world's mineral industry, hosting more than 1,100 exhibitors and 700 speakers. Would you share some of the key intelligence, Rob, that you picked up while at the conference?
Yeah, one of the things that I picked up on was that companies like Tesla are now approaching miners directly to get silver. I believe that there is a silver run going on in the worldwide markets right now. I've heard from several analysts that the COMEX may be blocking silver going to foreign entities. That's just hearsay. I can't prove it, but that's what I'm hearing from multiple fronts. But when I was talking to the miners, one of the mining companies that follow really well, Impact Silver, a primary silver producer, small silver producer in Mexico, has in years past done contracts with Samsung and so forth. But Tesla came in and they're helping build some of the mining infrastructure for their new mines. So the miners are now getting money to help build the mines and to help subsidize the mines in addition to selling all of their output. So Impact Silver has, 100% sell of its silver before it ever mines it by contract. And so now a lot of industry is starting to go directly to the miners because the big exchanges don't have enough liquid silver. And silver in particular has been in a mine shortage for 4 years now. It'll be 5 years this year. And so there isn't enough coming out. So market participants are now going direct to the mines and they're circumventing this whole industrialized market, which can't keep up. and can't get enough silver into the hands. One of the reasons why there's not enough silver is silver's not high enough price. It's been running at about or below or just over the cost to mine for primary silver producers. And most silver is produced as a byproduct of other mines, about 72%. So if you're doing copper or gold and the demand for copper or gold goes down, or the prices aren't, enough,
Exactly.
or lead or zinc or tin, you're going to pull that production back, and you're not going to care how much demand for silver is because it's a marginal input to your process. That's not going to make your decision for you. So the primary silver miners have been struggling for so long to keep their projects running while we have this deficit because prices are so artificially low, because the price alarms on the dashboard, they don't feed to the public. Because this market is so opaque, the silver market is so opaque because of the way it works versus gold, which is different. So silver price has been abnormally low for way too long. And what's going to happen is going to take a shortage to cause those alarm bells on the dashboard to go off, to cause people to say, oh my God, we got to get more silver and the money to flood in. And it's different than gold. And so that was a big thing. Also, platinum and palladium need to go up to about $1,200 to $1,300 an ounce for the mines to produce it. I talked to a South African mine, the country that produces the most platinum and palladium, along with Russia. And then I talked to a Canadian producer, and they said at $1,200, we can't do platinum and palladium. So expect potentially some short-term platinum palladium shortages to occur. And one last thing that may be the most important of all of this, I talked to a mining company out of Saudi Arabia. The Saudi Arabian state, the government, has gone to all of its other businesses outside of mining and said, partner with the miners to develop mines, because we need rare earths, because we need gold and silver, because we need tin, lead, and zinc, and copper, and all this other stuff, uranium, whatever. We need all this stuff. And they know that the oil and gas industry is going down, and their reserves are going down, and they know that they need to go somewhere else. So it's good that Saudi Arabia and the rest of the Middle Eastern nations are starting to develop the rest of their industry. That's good overall for the world, because if you're mining those assets, then maybe it helps make up for some of these deficits. So that's a nice aspect of world markets. The thing that's interesting, though, is that's going to give Saudi Arabia a lot of independence as they develop those industries. And so they're no longer dependent upon that petrodollar trade. That's another form of de-dollarization.
Yes, it is.
When countries get outside of the petrodollar as their primary focus, their laser beam focus, and they start to develop other markets, that's going to further weaken the petrodollar trade. And it's going to cause the rise of other countries around the world that traditionally had maybe not been commodity-based financial powers. And so I think that that's going to add a little bit to the changing geopolitical landscape as well.
Really appreciate you sharing those. Rob, if you were invested in gold mining equities and it was evident that a recession was strongly forming, would you exit the miners and wait until the recession did its worst? Or do you see the economic scenario being a positive for gold miners, similar to how it was for, say, homestake mining during the Great Depression, where both the share price went up 600% and their dividends skyrocketed?
Yeah, I get asked this question a lot, and I have to warn people, be very careful with this particular end of the market. The equities are highly leveraged. And when I talk about leverage, the precious metals equities, probably more than a lot of equities you're going to look at, are extremely leveraged to the underlying commodity price. And so if silver and gold do well, they tend to do well as a whole, not all of them. It's their relative position, their relative balance sheet strength, the relative strength of their management team, a lot, jurisdictional risk of what the political co is doing. Are they making it hard to get a mine permit, easy to get a mine permit? What is the chaos in the country? We look at South Africa, a lot of chaos in that country right now. I mean, you have great mining projects that you could get started, but the chaos in the country right now is not allowing some of those to come to fruition. Capital's not attracted to areas that have geopolitical issues or political issues, that type of thing. So all of that being said, there is an absolute high amount of risk in the miners. As long as you accept that and you're investing with discretionary funds, then you can take into account what I'm going to say, the following. Typically, the miners do well after gold and silver are in a bull market leg. We saw it in 2020. We saw it in 2016. We saw it in 2008, 2011. One thing that happened in 2011, the miners pulled back before gold did, because a lot of the miners during that bull run had misallocated funds to management teams, and the projects weren't getting developed, and the market started to get aware of it. So people started dumping mining stocks before the end of the gold bull market. So just because things are going well doesn't mean the miners are doing all the right things or all the projects are going the way they should. So you have to understand there's a lot of front and tail risk, on those miners. What you want to do is hit it in the sweet spot. And so you kind of alluded to that. Once we get the general sell-off in markets, but gold and silver is going up, eventually the mining equities will catch up. They'll get sold off at first with everything else as people seek safety and try to get to liquidity. but then they'll start to come back because people will see the precious metals prices and say, wait, I can go over there to the miners and get leverage to that precious metals price. Some will do it via options trade. Some will go into the equity space. And you can do that. Just be very careful going to equity space. It's a very risky space. But in a typical bull market in gold and silver, particularly gold and silver, much more than the other metals, it will tend to drive those equity prices up as a multiple for the healthy companies. Not all companies will be healthy. Not all projects will be ready to go. So there's a lot of research that you have to do there. So if you're going to invest in that space, I always caution people, do your research. But typically, yes, the mining equities tend to do well. Now, whether you should get out of them and come back in later, that's a decision that you have to make for yourself. I will say this, the mining equities are historically cheap at this moment, and we haven't even gotten into the next recession. Could they pull back more? And yes, entirely. But I think there's so much upside room that if you're already in them, I wouldn't tell you necessarily to sell them. You could rebalance a little bit if you wanted to into certain areas of the equity space. I would be, careful just totally getting out, because what you're trying to do then in coming back in is you're trying to time that market perfectly, and timing is very difficult.
Right.
So given the fact that they're really cheap right now, you're probably okay being in them now, but just watch your entry points and your timing there, and don't bet the house on any one stock. I mean, you'll lose your shirt faster that way than anything else.
I think those who are invested will appreciate that advice that you just gave there. Okay, so let's discuss silver for a bit, Rob. What can you mention on silver as we launch out into 2024? You touched on supply and demand, maybe solar panels, gold silver ratio, new mines, new utilizations, monetary metal. What is your current silver thesis?
So silver right now has been in deficit if you believe the numbers, and the problem with that is, if you look at Silver Institute or Metals Focus, the numbers that they use, they're the best numbers we have, but people feel that they're understated. Maybe that's just the market enthusiast saying, no, it's worse, it's got to go higher. Or maybe that's real. The reality is, in the mining sector, it's very difficult to tell, because not everything is registered in a central registry. What people have, what the viability of certain projects are, what the near and long-term supplies are going to be. And you also don't necessarily know, based upon the type of recession we're going to, what the change in demand is going to be from an industrial perspective. And silver is different than gold. It's more used industrially now than it is as money, whereas gold is still used more as money, or a high quality liquid asset is the banker's terminology, versus like jewelry and as money, in industry. So silver's got a different demand supply profile, but we've been in shortage, and it looks as though there's not enough money at current silver prices. Now at $24.50, you're starting to get in the realm of where more projects become feasible, but we've had such inflation in the last few years without silver price moving to account for it. Because remember, gold tracks inflation very well. Silver tends to have bigger boom and bust, and it's not always a huge inflation tracker. It's a commodity now. So it's treated as a commodity until it becomes money, and then it goes like this. But in any case, silver hasn't kept up with inflation. So all these mining projects, they can't start. There's just not enough money in it. We need $30 silver now versus 2 years ago, it might have been 25. Mm-hmm. And so a lot of these projects aren't starting. So our forward supply 3 to 5 to 7 years from now is not getting developed. And so not only do you have a current silver shortage, which we believe could be understated, but the next 3 to 5 to 7 years is going to be worse.
Yeah.
You're going to have to jack that silver price up to $50 and $100 now to get people to quick start mines. You're going to have to get political jurisdictions to fast track silver permits. And what's going to happen is, even if you do all that, remember, almost 3/4 of the market is byproduct output from gold, lead, zinc, all those other things. So depending on how the general economy goes, if we get into a big deflation and we're just shutting down copper mines, that's going to start to choke off silver. So there are a lot of dynamics in silver that it could take a nice slow, steady approach. It could do a moonshot. Nobody knows, but it looks like silver, I think, could be, it's highly speculative, but it could be something that really returns orders of magnitudes more than gold. And as far as the ratio goes, which you mentioned, gold sitting at a really high ratio to silver, usually over time that corrects. Yeah. And typically in a period that we're going through where silver is viewed as money, again, gold and silver is viewed as money, silver rises more as a percentage overall than gold does, because it's a poor man's gold, because a lot of people can't afford $2,180 gold, but they can afford an ounce of silver. And so when that monetary demand comes in, it pushes silver past the returns of gold. And so that's probably what will happen again. No guarantees, but that's typically what's happened in the past. So overall, I think the markets are going to become a lot more healthy. Right now, I would say, if you're interested in gold and silver and you want to do it, you've already made that decision, you're not listening to what I'm saying, but you've already made the decision for yourself, then I would say do it now. because there is going to be such a shortage of available liquid, cheap gold and silver when the world starts to sector rotate out of these bonds and stocks, that you're not going to be able to find it at current prices. These current prices are going to be, dust in the past. It's going to be, dirt down the road that you've already rolled over. There's no way we're going back to that. We're going to have a new plateau set in some of these prices. And I also think, to be honest with you, after it's all said and done, 8 to 10 years from now, all commodities are going to be exorbitantly more expensive than they are now, because they're mispriced given the dollar system and the mixed signals in that system. So the entire commodity complex not only is going to have a bull run, but it's the price, the base prices that we expect for these commodities is going to get more expensive, which means other things that you're going to buy are also going to get more expensive as well.
So so I hear a parallel in your silver thesis to uranium, and from several years ago, and that's exciting for those who are paying attention, and hopefully as that's happening, that'll bring in more eyeballs and investors into the space to realize how critically important this sound money really is. So, Rob, I want to talk about the investing mindset of today's investor as it relates to our retirement portfolio. So, in your analysis, will the investing mindset and allocations of the last 20 to 30 years work moving forward, or do we all need to think differently about allocations, where we put our dollars, what's making our nest eggs grow, and also to stay protected? Could you speak into that?
Yeah, I will say since 2009, since I became aware of this giant Fugazi dollar system and became aware, and back then I had some licenses, Series 3, 6, 6, 7. I didn't hang on to them for very long, not licensed anymore. I just realized the markets were not, what a lot of people thought they were. I felt like I had insider knowledge in a lot of projects that I did in audit, a lot of things that I did that I saw the inside of the mortgage market, what a lot of people didn't see. I worked for a mortgage broker as an internal auditor for a long time. And during the crisis, I was doing a big mortgage engagement for a big bank. I saw a lot of stuff people didn't see. And so I've never really believed in these 60-40 portfolios. I personally call them garbage, because you could have thrown a dart at any portfolio and made money the last 15 years. If you can't make money during the last 15 years when the Fed's printing the way they are, then I'm sorry, you don't need to invest. You need to hire somebody else and go do something else, right? Because a rising tide raises all ships, and we were printing more money than ever been created in the history of mankind. If you can't make money in that environment, you're just not a business person. I'm sorry. No offense, and people do other things. But that gave rise to all these, portfolios and all this, scientific, math formulas around doing this and that. At the end of the day, what really creates value is value creation. Buffett was right in the long term. And that always happens throughout history. Whenever we bubble and the man tries to make the market, natural law comes back in and slaps you around and says, we're going to reassert ourselves. So when I look at portfolios now, personally, I got out of stocks and bonds a long time ago. Got rid of my pension, my 401k. I cashed in and paid the taxes years ago because I saw this rotation coming. And so I was never in a 60-40 stock portfolio for very long, or an 80-20 or, whatever. And I was never like, well, I'll do 25% international and 40% small cap US. And no, thank you. Now, did I leave some money on the table? Sure. But what I did was I gained more than money. I gained knowledge. And now I'm a much better investor in any market than I used to be. And I'll make up more on the backside than I lost not participating in this market. Trust me. Because the opportunities I'm going to capitalize on are going to be generational. Not only generational, but I think from a worldwide perspective, historically generational, because I think the issues are that much bigger and everybody's doing it at the same time. So personally, I don't tell people they should own 10% gold or whatever. I will say this. If you're an investor that only understands 60-40, just from that perspective, if you held 10% gold, it would have reduced the downside losses on your portfolio enough that you would have made more than if you hadn't had 10% gold. Yeah. But as we're rotating out of the system, if you don't have gold and silver, I don't know how you're going to make money. I don't know how you're going to invest. I don't see the stocks and bonds going up forever, not with the currency regime change that we're going through, not with other currencies around the world coming, to the center, and a mix of currencies that are now interdependent on one another, but not one dominant. You're not going to get that home field dollar bonus discount that you got since 1971. So I have a hard time. I don't believe in portfolio ratios. I think that they were a product of a system that you know, allowed us basically to print money at will. And I think they're not going to work in the new system. What you're going to have to is look for value creation. Go back to Buffett methodology, or just go back to, you know, Peter Lynch, all those guys that understood that money comes to those who create value. We're getting back into that time frame in society. If you're not creating value, your investment's not going to do well. So you want to look outside gold and silver. You want to look for companies that are creating value and creating solutions for the new economy. Tech will be big, but I think we're going to get back to farming, industrials, staples are going to come back. But look for where value is going to be had. Where's value going to be had? We'll look at food and energy. It's expensive as it's ever been. If you can be a food producer in the U.S. or an energy producer, you're going to do well the next 10 to 15 years. Or anybody that's solving issues, offering solutions to people. Banks that offer micro loans, community banking. Some people think that this will be the end of community banking, and it could be, but and the rise of super banks. But I would say that the backlash from the world around the banking system is going to be so strong that I think we're going to have community banks. But I also things like cryptocurrencies, which allow people to transfer outside the existing system and relieve pressure from the banking system. Those types of things could do well. So there's a whole plethora of things that are going to do well. And what should you put your money in? Well, just do your own research, right? Be careful listening to financial advisors that lived in the old system and don't understand generational changes in systems that always occur throughout history. If they're stuck in the old system and their income is dependent upon you putting money in the old system,
exactly,
be wary of that. It doesn't mean that they're bad people. It just means that they're not looking to the future. And you really, for the most part, the person that's going to make the most money and do the best is a person that looks to their own future and looks for those opportunities and understands those opportunities and invests against the crowd. This is a time you want to be investing against the crowd.
Contrarian.
You know, be a contrarian. This is a time where contrarianism really works.
Okay, well, so before we wrap up here and I ask Rob our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the interviews that we conduct each and every week, all in one free site. Also, when you subscribe, you'll receive a free gift from us. It's a report that we recently wrote that's based on an important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift from us. If you've enjoyed the conversation with Rob as much as I have, please let him know. Hit the like and subscribe button and leave a comment below the video. All right, Rob, in wrapping up the discussion, I've got a two-part final question for you. What's keeping you up at night that you're keeping an eye out for to potentially happen this year? And secondly, what haven't we spoke about that you want the viewers to know or consider for 2024 and 2025?
I think we're going to have bank failures. So, and that'll dovetail into what people should consider. Bank failures are going to come. Don't be scared if you're prepared. I certainly would not advocate everybody take their money out because we're going to bankrupt the banking system if we do. So there's a community aspect and there's an individual aspect. Balance the community with the individual. Do what's right for you as an individual, but be careful how your actions can affect other people. And I say that because I think during this next few years, starting this year, moving the next few years, there's going to be a lot of economic pain, and just be wary of people that are going through that economic pain. Be wary of bank failures. Make sure that you're finding alternative ways to transact outside the banking system. Don't have all your money at home. You don't want a home invasion scenario or somebody steals it, or you have a fire and you lose all your cash. But find ways to maintain liquidity outside the banking system. Use a bucket approach. Spread your risk in the financial system across different avenues. I don't want to be a financial advisor, but I would say private cryptos, be careful with them. They're still in early infancy, but they can be great transmission mechanisms. Find ways to store money, maybe gold, silver, maybe other things, businesses and things that can help you. Don't keep all your money in the banking system. And look for valuation in places you may not have looked at it before. Look to people with good ideas. Look to income producing businesses that are tend to be inflation resistant or recession resistant, or do well during a recession. Look to areas and avenues to benefit yourself along with other people. If you want to be successful in life, you have to offer something that people want. If you're never offering anything that anybody wants, in other words, you're not solving a problem, you're not going to have income. You're not going to experience any sort of success. Take the focus off yourself and put it on other people.
Great
When you
advice.
take the focus and put it on other people and you're providing solutions, you will be successful at whatever it is you're doing. And at the same time, providing solutions to people out there that are hurting. And if you're watching this broadcast, you're probably so far along where 99% of people are because you're aware and you're educating. Know that you're already that next solution provider. You're already the leader in your little community.
Yeah.
So be a good and active leader, help people solve problems, help deal with people's economic pain, and you will do better probably than you ever imagined. But take that focus off yourself and put it on other people as well.
That's outstanding. Rob, thank you so much for being so generous with your time, your analysis, and your ideas, and for coming on to Metals and Miners. It's been a joy to spend this time with you. Can you tell viewers where they can learn more about your work and how they can connect with you?
Yeah, simply find us on www.goldsilverpros.com, which is the online bullion store, or Gold Silver Pros on Twitter, YouTube, and other social media. Sign up for our free newsletter. We send out just a couple of 3 times a month an email that has deals in it if you're looking for precious metals or just information to help you out. It's all free, no subscriptions on our side. Yeah, and that's how you can reach us.
And you have a YouTube podcast?
Yeah, I do have a YouTube and a Twitter.
Okay, wonderful. Everybody go and look up Rob. He's super informative and shares his ideas, his thoughts, and his experiences. And he also interacts with everybody, so it's fantastic. Rob, thank you so much for the time that you spent.
Yeah, thank you again for having me on. It was absolutely my pleasure.